Hello everyone, this is Paris. Welcome to Budgetholics. Facebook recently announced they would be renaming the company to Meta. This signals the company's shift of focus towards the Metaverse. In today's video, we're going to talk about what the Metaverse is and what, according to my research, are the 5 best companies to invest in within the Metaverse space. If you're interested in personal finance, investing, and wealth building, please hit the like and subscribe button as this really helps me with the YouTube algorithm. Without further ado, let's jump right into it. Firstly, what's the Metaverse? You can think of it as the next iteration of the internet. If you were around at the time, you can remember how the archaic web pages looked like. If you were able to find a picture, you were lucky, and if your connection could handle it, you were even luckier. Afterwards, we got social media, online games, which brings us to today. The Metaverse is a world of interconnected virtual worlds where people can play, work, or just socialize with each other with the help of AR, which stands for augmented reality, or VR, which stands for virtual reality. The Metaverse has 3 main features. Firstly, since it's a virtual world, there is no limit, and in contrast to older online games, there is no server maintenance, no server downtime. Instead, everyone will be able to be connected and interact on real time without stopping. If you've played an online game such as World of Warcraft or Lineage, you get the gist. You can gather with a group of friends and perform activities together. If you've known people who've played these games, then you should expect things are about to get a bit worse, and you might also join them. The second feature of a Metaverse is it has an economy. Within the Metaverse, users can buy or sell virtual products created within the platform. With online games, this started in the form of gambling. Your avatar could gamble inside the game and win or lose virtual game currency.
Give me the gold right now. Trade me the gold. Trade me the gold. I've got a raid. Hey. See, I lose one, I win one. I lose one, I win one. Trust me, it's predictive gambling.
Do you feel guilty and remorseful after you gamble?
Brands such as Louis Vuitton have already started creating digital products for virtual games, and Nike has already filed patents for NFTs within the Metaverse. Thirdly, it will be simultaneously a digital and a physical environment, meaning aspects of the real physical environment we live in will be reflected within the Metaverse. A simple example of that is Amazon's AR view, where you can see if a new coffee table fits your living room. Another example is the formerly popular game Pokemon Go, where you could walk the street and encounter different Pokemon to fight and catch. Companies had a physical presence, and then they were required to either construct a web page or at least have some social media presence. After the Metaverse is widely adopted, they will most definitely have to be within this virtual world. The scale of their presence will depend on the kind of product or service they're offering. If you're a musician, you could host a concert within the Metaverse, and in some time we might even see a virtual Disney theme park within one of those platforms. Cathie Wood's ARK Invest presents a list of new emerging spaces to invest in for the coming year. This report is called Big Ideas, and in Big Ideas 2021, virtual worlds were one of the featuring emerging spaces. According to the report, the global gaming market will increase at 16% compound annual rate during the next 5 years, from $175 billion to roughly $365 billion in 2025. The AR and VR markets will grow at a 59% compound annual rate during the next 5 years, from $3 billion to $28 billion in 2025. Moreover, video game monetization models are shifting to virtual goods. Before, you either had to purchase the game or purchase a gaming subscription. Instead, games are now marketed as free. Users can make in-game purchases, either improving their characters or their avatars, or just simply buying aesthetic products. This was a short description of what the Metaverse is. But what are the 5 best companies to invest in? Starting off at number 5, we've got Roblox Corporation, trading in the New York Stock Exchange with ticker symbol RBLX. Roblox is a social gaming platform that allows users to play, create games, and hang out with their friends all in one place. The company's CEO described it as an online world where we can work, play, or entertain ourselves, and the company was launched as a Metaverse platform. During Halloween in 2020, they hosted an event in partnership with Chipotle, and they also feature a digital currency, the Robux. Roblox is one of the companies that has a first mover advantage in the metaverse space. They're either going to compete within the space or they're going to be bought out by one of the largest players within the industry. Currently, RBLX trades for $98.99. They have a market cap of $44.2 billion, which is impressive since they were only listed in March. They're currently trading within their 52-week average of $60.50 to $103.87. Around 80% of analysts think that the company is a buy, with 27% thinking it's a strong buy. Roblox has a gross margin of 74.03%. However, they have a negative operating margin, a negative net margin, and negative returns to assets, investment, and equity. This is expected of a tech company partly because they've been reinvesting every single dollar they are making to the company itself. At number 4, we've got Unity Technologies trading in the New York Stock Exchange with ticker symbol U. Unity offers software where developers can create and monetize their games in 20 different platforms, including Windows, iOS, Android, and PlayStation. However, their services are not limited to gaming. In terms of revenue, at the end of 2020, close to 800 customers represented the majority of Unity's revenue. However, no customer was generating more than 10% of that revenue, so they're pretty safe if one of their clients goes under. In terms of geographic diversification, they're pretty safe since they have clients in North America, Asia and the Pacific, and Europe, Middle East, and Asia. U is currently trading at $152.99. They have a market cap of $46 billion, and they're trading within the 52-week range of $65 to $175. They were also listed recently, last September, and it's also trading above the average analyst price target of $138.76 per share. However, again, 85% of analysts think it's a buy, with 31 of them thinking it's a strong buy. The gross margin of the company is 77.69%. However, they also have a negative operating and net profit margin due to spending on R&D. The return on equity, return on assets, and return on investments is also negative at the moment. At number 3, we have a company you most probably were waiting for, which is Meta Platforms, formerly known as Facebook. Currently, the company is trading in the NASDAQ with ticker symbol FB. However, if you're watching this video after December 1st, the company will be trading with ticker symbol MVRS. Currently, 20% of Facebook employees are working on VR and AR projects. They acquired Oculus in 2014 for $2 billion, which was the company that was producing the market-leading VR goggles. And Cathie Wood also bought $63 million worth of shares after Mark Zuckerberg announced that the company was focusing on the metaverse. Facebook took ownership of the metaverse transition by renaming their company. And in terms of marketing, that's pretty smart. They also have a digital currency, formerly known as Libra, currently named Diem. Although some people have called it a cryptocurrency, it really isn't. It's more of an in-game currency if you've played online games. However, there are some limitations that Facebook will need to overcome. The first limitation is widespread adoption. We know that the metaverse will most likely be populated by younger people. Many of us were using Facebook and then migrated to other social media because we were starting to get friend requests by parents and long-lost relatives. Those generations aren't likely to enter the metaverse, at least in the short term. Instagram is now competing with TikTok for a market share of younger viewers. And finally, Facebook has gotten a lot of bad publicity regarding data usage, news manipulation, and so on. However, if they are able to overcome those problems, I'm sure the company will do well. Currently, the stock is trading at $344.18. They have a market cap of $941 billion. They're one of the largest companies in terms of market capitalization, and they're trading below the 52-week high of $384.33. The Facebook and Instagram outage a couple of weeks ago was a great buying opportunity and a great time to start building a position on Facebook. If you bought back then, kudos to you. The average analyst price target is $402.26, which is around 16% above what the company is currently trading at. 83% of analysts think FB is a buy, with 32% thinking it's a strong buy. They have a gross margin of 80.58%, an operating margin of 33%, and a net profit margin of 33.9%. They have a positive return to equity, asset, and investment of around 20 to 25%. At number 2, we've got Tencent Holdings, which is one of the largest Chinese companies. I think right now it's the largest in terms of market cap. It's trading in the Hong Kong Stock Exchange with ticker symbol 0700, or you can also buy it in the over-the-counter market with ticker symbol TCEHY. If you want a broker to buy Tencent from, you can sign up to Freedom24 using the link down in the description, or you can also get a free stock worth up to $600. You also have a chance of winning a Tesla stock currently worth around $1,200. Now, Alibaba, Tencent, and Baidu are the big tech companies of China. Alibaba is viewed as the Chinese Amazon. You might already know about it. Baidu is viewed as the Chinese Google, and Tencent is viewed as the Chinese Facebook. With a population of 1.4 billion, the Chinese market is something we cannot dismiss. They have a pretty simple business model, according to Monish Pabrai. I'll let him explain it.
And I realized that basically Pony Ma has a very simple business model. He has two businesses. One business that he has is his army of software engineers. I don't know how many engineers he has, maybe 25,000, maybe might be 50,000 now, but it's a large army of software engineers. And this army of software engineers, the way the software business works is that the productivity difference between an incredible engineer and just a good engineer could be 1,000 to 1. So you would be willing, as a company like Tencent, to even pay $50 million a year to a truly, truly incredible software engineer. So he's got this army of engineers. It's basically a massive bazooka that he has with this army of engineers. And he decides where and how he wants to fire the bazooka. And the way they fire that bazooka is, for the most part, even if they have some misses, they end up with this total dominance. So for example, they have total dominance on video games, okay? And I realized that it really doesn't matter what the CCP or the Chinese government does regarding video games. It is like a pimple on a camel's butt from Tencent perspective. They have almost no profits or revenues from within China in video games. It's probably less than 5% of their video game top line and bottom line that's coming from China. So when Tencent makes, like, for example, they made $15 billion cash flow last year, Pony Ma goes to his digital army and says, what do you need? How many more engineers would you like? And they tell Pony Ma, Pony, give me $1 billion. So Pony says, yeah, that's okay. Here's your $1 billion, but that's not enough. Can you take $5 billion? And they say, no, we can't handle that. It's hard for us to hire 5 or 10,000 engineers. I cannot hire 25,000 great engineers. I don't know what I would do with them and how I would deploy them. So I cannot take more than $1 billion. So Pony says, it's so sad, but it's okay. Here's your $1 billion. Now Pony has 14 billion left. So then he goes to his business number 2. His business number 2 is he's got 30 digital Warren Buffetts. Okay. And he says, these losers in business number 1, they can't use my money. So here's 14 billion. Have fun. And then they go and they invest that in some of it will be whole acquisitions, but most of it is small minority stakes in a number of businesses. Okay. And that digital Warren Buffett, which is not one guy, maybe 20, 30 guys, put that 14, 15 billion to work. And just to make sure that all the money is used, Pony makes sure that they spend a little more than the cash he generates, because it bothers Tony. It doesn't bother Sundar that 70 billion earns less than 1%. And it doesn't bother Apple that 100 or 150 billion earns less than 1%. It bothers Pony Ma. And so Pony Ma doesn't even leave $100,000 with himself. If he makes 15 billion, he spends 15.5 billion because he wants to borrow at 1%. He doesn't want some checking or savings account giving him 1%. So he makes sure that when bazooka number one cannot use the money, he puts it into bazooka number two. And once he's fired both those bazookas, he's got no money left and he's very happy. So now, here's the economics for the last 20 years. Model number one, bazooka number one, earns 65% annualized return on capital invested. Okay, day in and day out. Any billion he puts in historically has made 65% a year. Model number two makes 35% a year. What a terrible business. Okay.
Most of their revenue comes from services and games, including Fortnite, League of Legends, and PUBG. They also have a fintech and business services segment with apps such as WeChat and WePay, which are the dominant payment and communication apps in China. And they also have an online advertising segment, which was the third in terms of revenue in Q2 2020. As you can see from their gaming titles, they're not only offering their services to Chinese residents, and in the past 5 years, they've had much more of a global outlook. I'll be talking about the over-the-counter stock for the sake of simplicity. If you don't know what over-the-counter stocks are, please let me know down in the comments, and maybe I'll make a dedicated video discussing how over-the-counter markets work and what are some potential pros and cons of buying OTC stocks. TCEHY is currently trading at $59.80. They have a market cap of $570 billion, and they're trading within the 52-week range of $53 and $99. The analyst's recommendation is a buy, and they have a profit margin of 35.33%, an operating margin of 24.66%, a return on assets of 6.13%, and a return on equity of around 24.82%. Just a small disclaimer here. I'm not a financial advisor or planner, and this video is for education and information purposes only. You must have heard again and again, if you don't know which company to invest in, maybe it's best for you to pick an ETF. And here's an honorable mention for you. The Metaverse ETF, trading in the New York Stock Exchange with ticker symbol META. META was designed by Roundhill Investments to offer investors exposure to the Metaverse by providing investment results that closely correspond, before fees and expenses, of course, to the performance of Ball Metaverse Index. It includes companies such as Tencent, Facebook, Roblox, Amazon, and Microsoft. If you're looking to invest within the Metaverse space, however, you haven't picked a company, looking into ETFs such as Meta is a good place to start. However, keep in mind that it's quite expensive. It has an expense ratio of 0.75%. This means that for every $1,000 you invest within the ETF, you will be charged $7.50 every year. To put that in context, if you invested in Vanguard's S&P 500 ETF, trading with ticker symbol VOO, you would pay an expense ratio of 0.03%, meaning for every $10,000, you would just pay $3 a year. That's why looking at expense ratios is very important when buying an ETF. Finally, at number one, we've got NVDA trading in the NASDAQ with ticker symbol NVDA. They are an AI computing company, and they operate through two business segments. The first one is graphics, and the second one is computing and networking. NVIDIA graphics cards, apart from gaming and professional applications, are also being used for Ethereum and Bitcoin mining, and its semiconductors also have autonomous driving applications. NVIDIA is currently heavily profiting from the global semiconductor shortage, and it's going to be a key player in a number of emerging spaces, including data centers, gaming, cryptocurrencies, and autonomous driving. However, this is a Metaverse top 5, and NVIDIA is also entering the space mainly through NVIDIA Omniverse.
Let's talk about Omniverse. The internet changed everything. It's surely an understatement. We are always connected now. The internet is essentially a digital overlay on the world. The overlay is largely 2D information: text, voice, images, video. But that's about to change. We now have the technology to create new 3D virtual worlds or model our physical world. These virtual worlds will obey the laws of physics, or not. There can be AI or friends with you. We will jump from one world to another, like we do on the web with hypertext. This new world will be much larger than the physical world. We will buy and own 3D things, like we buy 2D songs and books today. We will buy, own, sell homes, furniture, cars, luxury goods, and art in this world. Creators will make more things in virtual worlds than they do in the physical world. We built Omniverse for builders of these virtual worlds. Some worlds will be built for gathering and games, but a great many will be built by scientists, creators, and companies. Virtual worlds will crop up like websites today. Omniverse is very different than a game engine. Omniverse is designed to be data center scale, and hopefully someday planetary scale.
Currently, NVDA is trading at $293.70. They have a market cap of $766.4 billion, and they're close to their 52-week high of $323.1 per share. The average analyst price target is at $246.08, which is around 16% below what the company is currently trading at. However, 85% of analysts think the company is currently a buy, with 27% of them thinking it's a strong buy. They have a gross margin of 62.34%, an operating margin of 27%, and a net margin of 26%. They have a return on equity of 29.78%, a return on assets of 18.79%, and a return on investment of 21.46%. This was my list of the top 5 companies you should look into if you're looking to get some metaverse exposure. Once again, this is not financial advice, but if you enjoyed this video, please hit the like button and subscribe. Let me know down in the comments which of these companies you're bullish on, which of these companies you already own or are thinking of opening a position in, or what are your picks for the best metaverse companies. Check out the links in the description to get some sign-up bonuses. Lastly, if you know of anyone that will enjoy this video, please feel free to share it. And until we meet again, don't stop investing. Cheers.